So the Fed just hit pause on interest rate hikes. But two voters basically said, pause, that's cute. Let's cut again. Meanwhile, the dollar tried to stop the bleeding after, achieving a 4-year low. And while at the same time, the South African rand is flexing near 4-year highs. Natural gas is acting like it drank way too much coffee yesterday. And the S&P 500 is hovering near record territory, while tech earnings do their usual emotional roller coaster. For those of you who don't know who I am, good morning. My name is Francois. I'm your market analyst here at ATFX Africa. And this is your daily market brief, where during this session, we'll be breaking down currencies, commodities, indices. We're going to start with fundamentals first, then do technicals. And obviously, we'll keep it professional, but we'll add just enough humor to remind you that markets are basically emotions with a Bloomberg terminal. That being said, let's get into the first part with regards to Fed focus and what to expect going forward. So, as stated, the Federal Reserve left rates unchanged at that 3.5 to 3.75 range at their meeting that concluded yesterday. This is obviously in line with expectations, and this proceeds after we saw 3 consecutive rate cuts last year that brought borrowing costs to their lowest level since 2022. But here's the detail that matters. The decision was absolutely not unanimous. The vote was 10-2, with 2 governors in favor of another 25 basis point cut. So, what's the Fed telling us about the economy of the US? So that just basically states that the economic activity is expanding at a solid pace. Job gains have remained low. The unemployment rate is showing signs of stabilization. Inflation remains somewhat elevated. And the Fed stance going forward was very clear. They are clearly assessing incoming data, the evolving outlook, and the balance of risk. Meaning policy is not at a preset course. Okay. After the interest rate decision, Powell also had a press conference. And during his conference, he stated the following. He stated that the economy is coming into 2026 on a firm footing. Rates are appropriate for progress on both goals, which is employment and inflation. Housing activity remains weak. He acknowledged that the labor market has softened even while the economy surprised with strength. And on inflation, he said that core PCE in December is estimated around 3% and pointed out that much of the overshoot has come from goods prices linked to tariffs rather than demand. He also noted core PCE excluding tariffs effects is running just above 2%, calling it a healthier development. He said no one's base case is a rate hike, and he framed future cuts as conditional. Weaker labor markets argue for cuts, however. Continued labor strength argues against rushing. Overall tone at this point in stage is relatively neutral, leaning mildly dovish, keeping the door open without committing. So, what should you be watching for next? So, in essence, the takeaway here is relatively simple. The Fed is comfortable holding, but the split vote shows there's still an active debate inside the room, and that debate will remain sensitive to labor and inflation signals. And that sets up the next question. If the Fed is on hold for some time, what happens to the dollar and risk assets in the meantime? This is kind of, that perfect segue. So with that being said, let's get into our first currency pair. Again, if you have any questions, if there's any charts you want me to look at, please feel free to pop it for me into the comment section. I do see I've got a few hellos coming through. Hi guys, thank you so much for joining. There's quite a few people attending here today as well. So I want to kick things off a little bit more local. So we're going to go homegrown today with USD ZAR. Now, can't talk about USD ZAR without talking about the dollar. So I'm going to start there and then work my way through. Now, the dollar index traded above 96 this morning after hitting a 4-year low earlier in the week, helped by comments from US Treasury reaffirming a strong dollar policy. That matters because it contrasts with easier signals than a weaker currency that could be acceptable. Okay. We also saw additional comments from Fed officials that says strong US fundamentals and sound policies should attract capital inflows. They also dismissed speculation of US intervention to sell the dollar against the yen. Even with that, the broader backdrop remains relatively heavy. So the greenback had faced significant selling pressure amid fears of, again, joint US Japan currency interventions. US president had additional remarks and broader geopolitical events, as well as trade and monetary policy uncertainty. All of this kind of just weighed on the dollar. Now, the Fed obviously held their rates at the current level, and this also added to the entire longer term story. Now, zooming into specifically USD ZAR is currently trading at around 15 Rand 70 to the dollar. It is down 0.1% on the session, and over the past month, the Rand has strengthened around 5.6%. Now, over the past year, so that's the last 12 months, it's up 15.7%. That is just crazy, traders. Supporting context here also points to the Rand strengthening towards levels last seen in June 2022. And this is obviously helped by record prices from key exports, including gold, silver, palladium, and platinum, as well as lingering concerns over the US economy. And the timing is also important. For those of you who don't know, we will see the South African Reserve Bank interest rate decision later this afternoon. Now, the South African Reserve Bank decision is due today with expectations leaning towards no change after they cut rates in November. While we do see some economists see a potential cut risk depending on inflation dynamics. So, that being said, if we have a quick look at the charts, this is a little bit of a crazy picture to look at when you actually think USD ZAR. Now, the downtrend has been persistent with 11 consecutive weeks of declines. Traders, this literally means that for the last 11 weeks, the Rand has outperformed the dollar. Just let that sink in for a little second. Now, the next psychological area is obviously 15 Rand to the dollar. Will we reach it? Give me your thoughts. Okay. So the same way to frame all of this is scenario based. If momentum continues to favor Rand strength, the Rand will keep watching whether price continues to work towards that 15 Rand psychological level. However, if the dollar stabilizes more decisively after the strong dollar policy messaging, it could slow that move a little bit, especially with central bank risk in play as well. Just breaking the chart down here a little bit further, obviously, if we do look at some higher time frames, this is the first time since the beginning of last year where we have actually broken out of this descending channel. Again, I spoke about this last week as well, and I said, if that channel gives way, it's going to be relatively dynamic move further down. And that is exactly what happened. So yes, the channel gave way, and what happened literally within a couple of days, we shot down from being above 16 to almost getting to 1650. So very, very quick, sharp movement because of the fact that that larger structure has been broken. Now, again, if we do look at chart pattern rules, that basically states that there is a potential for the move that we have just seen here. I just want to see, why am I not finding this? TradingView have an update that I'm not aware of, and now my stuff here is looking different. Anyways, yeah, let's use this. So if we have a look at the size of the structure of that channel, we can kind of look at a similar move down, which if we look at the break of that structure, this was where the structure was. What's the potential move down? Sorry about that. That kind of gives us a potential target of around 15 Rand 10 cents to 15 Rand 15 cents to the dollar. So definitely still a lot of movement. And then obviously markets might just decide to test that psychological 15 Rand to the dollar level. Now, breaking this down on a lower time frame, we can obviously see we had this nice move down. We've gotten quite a few trading opportunities here with that larger change of character there, which gave us that initial break, retest, nice big sell off there on the price action. This was early in the week on Monday. From there, we got a relative amount of consolidation on Tuesday. And then on Tuesday evening, Wednesday morning, we got another break again, retest, which gave us another sell off, which gave us a higher retest with a break again late last night. So now again, that sell off already happened. Now we're coming back for that second retest now again. So just based on momentum, based on structure here at the moment, personally, I wouldn't really look at long positions right now. Short positions, on the other hand, is I'm relatively open to. Again, what I'm waiting for, we've got this retest here now, so I'd just like to see a break of structure here at 15 Rand 64 to the dollar. You can have stops just a couple of pips there above that high, and obviously aiming for this larger support level here at 15 Rand 40. Now, that gives us around a 1 to 1.8 risk reward ratio. Obviously, if you want to make that a little bit higher, you can always tighten your stop a little bit. I always like to be safe than sorry. So that's just relatively the momentum and direction that I'm seeing at the moment. Just based everything on price action here at the moment, I'm not seeing a comfortable option just yet for a move higher. For us to be able to look at any buy positions, we would have to break back above the 16 Rand 10 cents level. So that high there needs to be able to be broken first. And only once that happens, then we can start considering, in my opinion, some long positions again on this. Again, I would love to hear your opinion and your input on this as well. Okay, so in essence, here the trend has been strong, but event risk is still very real as we are going into today's session. Looking at Euro USD and Ethereum, also, can you tell me if I see correctly? Oh, wait. Also, can you tell me if I see correctly a Mariposa candlestick on the weekly chart for gold and silver? Okay, I'll have a look at that as well. Does that give good confirmation if so? Okay, so we're going to have a look for Robert on Ethereum and Euro USD. I'm going to do Euro USD just now, and we'll have a look at see if we can see that candlestick pattern as well on gold and so forth. Finally, Finally, USDZAR reached that 16 Rand mark I predicted and consolidated phase for a while. Fully agree with USDZAR analysis. Okay, perfect. Get that all off. Okay, cool. So let's go Euro USD. Definitely an interesting pair right now as well. Here we go. So Euro USD has had a very, very bullish run this week so far. I did do a larger breakdown on this on Monday, so which I obviously sent out via the market brief email and so forth as well. Now, I'm not going to go through the fundamentals. We've just covered the fundamentals basically on the dollar, but here we saw Tuesday we got that peak at $1.20 to the euro, and we had that massive pullback, which now we've seen a very, very large rejection on that $1.19 support level, and markets have kind of bounced from here back up. Again, very, very similar to the Rand story at the moment. The euro as well, very strong here at the moment. You can see momentum is just going one way. And to ideally just trade this at the moment is waiting for those lower highs, change of character, and then trade from there on forward. So again, here we have our higher high, higher low. I'm on a 30-minute time frame. You can probably drop it down to a 15 at the moment if you want. So you had that again, higher high, higher low. momentum still intact, and did a change of character. We've got this break of structure here. Again, I wouldn't really look for any short positions right now, but if we do get a break on this, I would say above this $1.20, that definitely opens up some long positions with can have relatively tight stops underneath this consolidation with a decent 1 to 1.8 risk reward ratio. That is a possibility on this. Again, wait for price action to confirm that move before just randomly jumping in. But I mean, even if we're looking on this, momentum indicators are pointing towards that oversold region. Just want to see a little bit of a push higher, break of structure, and then you can take the move from there. Again, does this align with what you are seeing at the moment? Yes or no? Seeing that this was a specific request, just let me know if this aligns with what you are seeing at the moment. While I wait for that, let's move over to Ethereum as well. We did cover Ethereum on Tuesday as well. So on Tuesday, we were looking for a break of structure of this specific area here. We got that initial break lower, a little bit of retest. There was a daily short there, and then it just broke higher again from there onwards. Now it's kind of hovering on top of this larger support level that we've been sitting on for more than a month now. So momentum hasn't fully turned bullish just yet, but it is starting to show strong signs. So in essence, you've got a few options here for you or yourself at the moment. We've seen this. If we're looking at day trades here, we've seen this relative amount of consolidation. Larger momentum at this point in stage is still bearish. So if there's a break of structure lower below this 2,923 level, that could open up the door for a retest of this 2,785 level. Or alternatively, wait for that break higher, which is, I would wait for a break above that 3041 level. That kind of opens up that initial full on break of structure where we can then take this as, higher high, higher low, higher high, higher low, break of structure. So aiming then for a new higher high. I hope that aligns with what you are seeing at the moment. Please just let me know on that as well, and then we can go from there onwards. Did say thank you, completely agree, and have the same conclusion to the analysis. I'm assuming that is referring to Euro USD. And then there was a question with regards to a Mariposa candlestick. I'm assuming on the daily time frame, if I remember correctly. No, on the weekly time frame on gold and silver. So seeing that we're just going to have a look at candles, I'm going to take off all the analysis and then go to gold and then go to weekly. And then we can zoom in a little bit here. So in essence, as per rules of a Mariposa candlestick, that is about as close as we get. Okay. Personally, on gold, if we have a look at this one, that is more a Mariposa candlestick than the top one. Okay. And the only reason, agree with Ethereum as well. Thank you. Okay, perfect. The only reason why I'm saying that's more of a Mariposa candlestick is because the rules to a Mariposa candlestick is either no tails or one tail. Okay. And if you zoom in here a lot, you can see here the bottom one, small little tail to the bottom, nothing at the top. Mariposa candlestick. This one here at the moment is just an extremely bullish candle, okay? Because the fact that this candle, there's a little tail at the bottom and there's a tail at the top. So as per the rules of Mariposa, that kind of voids the rules on that one. Okay, yes, it was that previous one, yes. Okay, cool. Then if you're focusing on that one, that's fine. That is a Mariposa. And if we're looking at silver, I would also be happy to go with Mariposa on that one. Where again, this is just a very bullish candle because the fact that there are wicks on both sides. Okay, perfect. Let's move on. And I'm going to move on to our commodity for the day, which is natural gas. Now, natural gas has been swinging around that $5.30 per million British thermal units as two forces are basically colliding here. On one hand, we have supply concerns that have eased because warmer weather forecasts are expected now, all of a sudden, again, to reduce heating demand. Now, again, as I said, if you trading natural gas and you are not keeping an eye on the weather channel, you are putting yourself at a disadvantage. Okay. So the National Weather Association outlook showed temperatures turning milder for the first week of February. So as we are heading into Feb, there's definitely some warmer temperatures coming within the US. Now, on the other hand, we have supply that is still recovering from weather disruptions. Output in the lower 48 states is on track to rise to about 93.5 billion cubic feet per day after dropping to 2-year lows around 92.4 to around 92.5 over the weekend. Now, around 50 billion cubic feet per day of production was taken offline due to frozen wellheads. We also have improving liquid natural gas supply flow, where liquid natural gas feed gas flows are recovering, expected to go to around 13.7 billion cubic feet per day after falling to a 1-year low of 11.6 billion cubic feet per day on Monday. So, in essence, in short, there is panic. There's that panic supply story. And it is as well cooling as production and flows rebound. And milder weather forecast is reducing demand for expectations. Now, when looking at the charts, and I just have to reset my charts after that extreme zoom in session we just did. Here we go. Okay, so natural gas is basically sitting in a defined decision zone at this point in stage. For the majority of this week, it's been a lot of consolidation, as you can see in this general area, sitting under that resistance here at around that $5.30, $5.40 level. There's the more psychological $5.50, which is this previous high point, which is more or less where we opened on Monday. Now, if prices press towards that $5.50 again, the market will then be testing whether volatility still has fuel. Now, if markets break below the psychological $5 level, there's a very big chance that it will come back for a retest of the support level here at $4.50. But again, we would have to wait for that break below the $5 level before that kind of gets implemented. So even on a daily, even on an intraday time frame, if we're looking here on like a 15 minutes, there's no real clear structure unless you want to trade this general range. So if you kind of want to highlight that range for yourself, and if markets get to one side and you see good price action, trading it back to the top and vice versa, it's one way to go about it. Personally, I would just rather wait for the larger break of structure. You can always monitor it on a lower time frame and then just hit your trades from there. Okay, any questions on natural gas? If not, then we will move on to our last and final instrument for today, which is the S&P 500. So US stocks were slightly lower this morning as investors digested a widely expected Fed hold, firstly, a mixed batch of mega cap tech earnings and additional futures performance from various data. If we have a look on yesterday's trading session, the Dow futures was down 0.3% on the day, S&P was down 0.2%, and Nasdaq 100 was down 0.1%. So a nice little 1, 2, 3 yesterday. This was primarily earnings driven, and there were some moves after hours. We saw Meta surge nearly 8% after a strong Q1 sales outlook. Tesla added about 2% on better than expected Q4 results, and Microsoft slid 7% on slow cloud growth and softer margin guidance. Now, we also saw additional companies such as Nvidia, which was up 1.6%, Micron was up 6%, Intel was up 11%. That was just crazy. And taking all of that into consideration, here's the big context for the S&P 500. The index rose to around 6,995, which just this morning means we are up around 0.3% on the session. It has also climbed around 1.5% over the past month, and it's up more than 15% year on year. It's also printed an all-time high above 7,000. So we did break 7,000 for the very first time. So new all-time high on that one. And that happened yesterday. So during yesterday's session, S&P shot past the 7,000 marks. The market tone is relatively simple as well, near record highs. But this also adds sensitivity because leadership is being decided in real time by earnings at this point in stage. Okay, now if we do look at the technical aspect, markets always get a little bit choppy when we get to all-time high territory. So again, we are trading just below that all-time high, which is sitting just above that 7,000 mark, roughly around 7,013. Oh my soul, that got stuck for a little bit. And we are trading above this now support level. Now you can also see here all EMAs are still very nice and bullish. Its momentum is showing that we are extended at this point in stage. But we did see markets retrace. We saw a nice little bounce here on the 21 EMA. And now markets are moving back up. Now, again, if we go and look at lower time frames, even on lower time frames, yes, we can see markets are still showing a bit of extension. So what does that mean? It means we have a possible probability of a retest, maybe of this 100 or even 200 EMA again. 100 EMA sitting around 6,980, 200 around 6,960. And then there could be a move higher. Alternatively, if price action breaks below that 200 EMA, that would cause a relative change of character, which then could lead to a deeper retest of the 6,850 general area. Now, in my opinion, you should be watching at the moment whether price holds near that 7,000 area or whether earnings volatility creates broader pullback. So in other words, even when the index is currently looking calm, the underlying engine, which is in essence tech earnings, can change the tone on this index very, very quickly. So traders, I'm gonna pose the question again. If there's any questions from your end, please feel free to ask. I'll be happy to answer. However, heading into today's trading and tomorrow, keep an eye on the following two things. Okay, how the post-Fed narrative evolves. Does the hold for some time start to feel supportive for risk sentiment, or does it keep uncertainty elevated? As well, whether the dollar attempts stabilization, because that has a knock-on effect for currencies like Euro USD or USD ZAR and that broader risk appetite. And then finally, for natural gas, watch that $5 to $5.50 area like it's a door in a horror movie. Okay, if it opens, things are going to get loud. And if it doesn't, the market goes back to pretending that everything is normal. Just want to see if there are any questions. Let me see. I saw them all on gold, silver. Okay, cool. Can I ask, what is your view settings? I think I look like I have a similar view experience at home. I'm guessing you're talking about TradingView. Most of my settings on TradingView is relatively default. Yeah, nothing too unique on there. Thank you so much. Appreciate. Only a pleasure. So traders, that wraps up our daily market brief for today, brought to you by ATFX Africa, the broker that gives you an edge in today's market. Now, if you want to go and experience the difference for yourself, simply head over to atfx.com if you are not trading with ATFX as yet. That being said, until I see you next time, stay sharp, stay focused, and trade smart.